In today's episode, we're going to be focusing on the Pi cycle top indicator to better understand what's going on in terms of Bitcoin's price action at around these current levels, while comparing it also to the pre-halving years. We see very similar behavior in the pre-halving years for Bitcoin 2019 and 2015 as well. So let's dive right into today's video. Subscribe to the channel for more videos like this in the future, and let's dive right in. So this orange moving average is the 111-day moving average, and it tends to act as a dynamic support and resistance, and it has very distinct qualities in pre-halving years, such as this one, such as 2023. If we look to 2019, for instance, we see lots of oscillation around this 111-day moving average. Here, for instance, acting as a new resistance before rejecting, before breaking back above, retesting as support, and then overextending, then losing that level as support, and so on and so forth. Fundamentally, holding this level as a support and just staying above it is what enables the bull runs, but this tends to occur later in 2024. So that's analogous here. So 2020 is when we saw that successful retest in a halving year, and we'll probably see the same thing happen in a halving year. 2024, April 2024 is when the halving occurs, and you'll see the same here. In 2015, for instance, we had lots of oscillation around this 111-day moving average, but then in the 2016 year, which was the halving year, we held this as a support. So one key takeaway, if there's any key takeaway that you should take from this video, it's that in the halving year, after a period of oscillation in the pre-halving year, we tend to see the Pi cycle moving average hold as a support quite effectively until the bull market peak. Once again, 2019 pre-halving year, lots of oscillation, but then in the halving year, we tend to hold this level, this Pi cycle moving average as a support, going all the way to new all-time highs. 2023, once again, pre-halving year, we're seeing oscillation around this moving average, but in 2024, you'll see in the halving year that we'll manage to hold this level as a support all the way to new all-time highs. That's the key takeaway from this video, but it's worth really diving into these patterns a bit more. So let's start with 2015. You can see that this Pi cycle moving average acted as a resistance, and then it acted as a support right over here, failed support, and then resistance with no real looking back in terms of a retest, but overextension to the upside, and then holding that moving average for the end of the bull market, essentially. So this final retest, just notice how it occurs in 2016, which is the halving year. July 2016 is when we saw the halving in that 2016 year, but during 2015, all the way to December, to the end of the year, we just saw consolidation, macro consolidation, but lots of movement, but in and around the Pi cycle 111-day moving average. So no conclusive trend here. That's what happens in macro accumulation ranges, and that's what happens in macro accumulation years, which is essentially the 2023, 2019, and 2015 year. We tend to see oscillation around the Pi cycle moving average, but it's only in the halving year where you see this level act as fantastic support. 2019, once again, oscillation, and we'll just bring this all the way to March 2020, for instance, or January 2020, actually. So here, 2019, lots of oscillation around here, and then in the halving year, we get into the halving year, but still oscillation around this region, because remember, from May 2020 is when we saw the halving occur. And notice how price begins to react to the Pi cycle moving average after the halving. You see a fantastic retest there, and after that, well, we really just saw fantastic upside to new all-time highs afterwards. So it's not just a halving year, it's also after the halving that we need to really focus on. So here, unfortunately, July 2016 is not something that we can see here. But let's zoom out perhaps to around here, for instance. So you can see July 2016, after the halving, fantastic holding of the Pi cycle as support. So looking to this cycle, what can we really expect? Because at the moment, this is the pre-halving year, right over here, 2023, all the way to really the end of the screen. We see support retest, overextension. Support retest, though failed retest, but still a reclaim. Here we lost this level as a support, and it hasn't been tested as a resistance. Notice how we're at 26k or 26,300 is where the pi cycle moving average resides at. Apologies, actually 28,130 is where the 111-day moving average resides, and price is around 26,300. So right now, actually, we might be seeing this period under a resistance. So this pi cycle moving average might be a resistance going forward. And it's important to look to the past in terms of how has price reacted when it has been below resistance. And this is, for instance, 2019, when we saw the pi cycle react as a resistance. No real picture perfect point of rejection at the pi cycle, but generally we can see that price is below the pi cycle moving average until it breaks above it and claims this as a new support. And one of the ways to look at the pi cycle moving average is that anything below it is typically an undervalued zone. So you can see here, this was an undervalued zone, and then we broke out. After that, we broke back down below the pi cycle moving average. So we're in undervalued territory, and then we break back above the pi cycle moving average. And this is the same with the 2015 phase. Undervalued territory below the pi cycle moving average, and then we see overextension, undervalued once again, and then finally overextension and stability at the support. So this is all really something to be paying attention to, that this pi cycle is going to be acting as a point of rejection, a resistance, but anything below here is bargain buying territory. And of course, bargain buying territory could be right now where we are, 26,300, but also much below that price point. So anything below here is fantastic buy side opportunity. And earlier this year and late 2022, being below the pi cycle moving average also represented a bargain buying opportunity. So anything below the pi cycle moving average is bargain buying territory. But of course, we want to see more of a bargain from here because there is scope for further downside. But generally speaking, when we're thinking about the 4-year cycle, so each 4-year cycle has 4 yearly candles, we have to note that candle 3 is the pre-halving year, so 2015, for instance, 2019, also the pre-halving year, and 2023, the pre-halving year as well. And notice how 2023 is already quite similar in this candle, for instance, and not as similar to this candle because we saw a long downside wick. And notice, or at least if we zoom in to this chart more onto, for instance, the weekly time frame or even the monthly time frame, because this is the 12-month time frame, we notice that downside volatility tends to occur earlier on in the pre-halving macro accumulation year. So for July for 2015, this occurred in January, for instance. And over here, this also occurred very close to January. Q1 generally is when we saw the downside wicking in 2019. And we're not going to really see downside wicking this year because we're already so far ahead in this year that really it's all about establishing the upside wick of this move, this part of the move. So when we focus on the downside wicking in a candle 3, that's when we should be looking to earlier in the year. But later in the year is when we should be focusing on the upside wick. So earlier in 2019 is when we focus on the downside wick. Later in 2019 is when we focus on the upside wick. So the downside wick isn't going to happen this year, but the upside wick is going to be probably happening. That's where we're going to see local topping out. We probably may have topped for the year. We may have probably topped for the year. It's quite possible, but generally speaking, this is the pre-halving year, and we might see some downside volatility going into 2024 because we always see downside volatility in a candle 4 in the new candle 4 that represents the halving year. So 2024, perhaps some downside volatility, even if we do push up, even if this isn't a local top, I feel like it is, but even if we do push up a bit, we'll still probably see downside wicking earlier in 2024 nonetheless. But in any case, that was pretty much everything to know about the Pi cycle moving average. Feel free to check out the video in the top right hand corner about the 4-year cycle to learn more about that one, or you can also check out the ultimate Bitcoin cheat sheet that I share with you guys here on YouTube in the left bottom corner. Check out your video. It's loads of choices here. Hope you enjoy them. Subscribe to the channel, like the video if you enjoy these, and I'll speak to you in the next one. Speak to you soon.